Howdy, everybody. Welcome to Liberty Call. Today is Thursday, December 19th, 2024. Hope you're having a fantastical day out there in the interwebs. Pretty nice day here in Colorado. Sunny, little clouds, not too chilly today. So, again, hope you're having a fantastic day. Looks like the markets lost all their steam in the last few minutes. The NASDAQ and the S&P fell into the red. So, is what it is. All right. Well, before we get started, I need you to do me a favor. If you give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All righty. Well, let's get into today's numbers. Dow Jones was up 0.04%, 15 points, closed at 42,342. S&P 500 down a tenth, 6 points, closed at 58.66. NASDAQ down 0.12%, 23 points, closed at 19,368. The VIX was down 3.87% today. It's at 2340 or 2379. Canada down 0.58, Brazil up 0.49, and Mexico down 1.27%. Headed over to Europe, Germany was down 1.2%, the UK down 1.14%, France down 1.22%, the Netherlands down 1.55%, Spain down 1.53%, Italy down 1.78%, Switzerland down 2.04%, and Portugal down 0.05%. Russian exchanges split today. The MOEX up 0.4%, RTSI down 0.22%. And the Asian markets, the Nikkei was down 0.8%, Australia down 1.7%, New Zealand 0%. In China, the Shanghai was down 0.36%, the Shenzhen component up 0.61%, China A50 down 0.32%, DJ Shanghai down 0.18%, Hang Seng down 0.56%, Taiwan weighted when it last closed was up 0.65%. All righty. So those are the markets for today, folks. Pretty exciting stuff. Let's go ahead and move into the market recap. U.S. stocks in post-Fed rebound after sharp sell-off. All righty. U.S. stocks recovered on Thursday following a sharp sell-off in the previous session, buoyed by stronger than expected economic growth data, despite concerns over a slower pace of Federal Reserve rate cuts next year in 2025. Resilient GDP growth. The U.S. economy showed robust expansion in Q3 2024, with GDP revised upward to a 3.1% annualized rate compared to the previously reported 2.8%. This follows a strong 3% growth rate in Q2, exceeding the Federal Reserve's non-inflationary growth estimate of 1.8%. This strong data reflects robust consumer spending, reinforcing the Fed's cautious stance on interest rate easing. All right. Federal Reserve signals fewer cuts. As expected, the Fed cut interest rates by 25 basis points on Wednesday, but scaled back its 2025 rate cut outlook, now projecting only 2 additional cuts compared to 4 anticipated in September. Inflation projections remain above target, with year-end inflation forecast at 2.4% for 2025 and 2.5% with year-end inflation forecast at 2.4% for this year, 2024, and 2.5% for 2025. The prospect of prolonged higher rates led to steep market declines on Wednesday. And today's reaction, Wednesday's sell-off of the Dow Jones Industrial Average plunged over 1,000 points, 2.6%. Its longest losing streak since 1974. The S&P 500 dropped nearly 3%, while the NASDAQ composite fell 3.6%, marking its worst performance since July. However, Thursday's rebound saw gains in key sectors. Micron Technology fell 17% after issuing weak guidance, while Darden Restaurants surged 15% following quarterly earnings and upbeat guidance. CarMax rose 2% on better than expected quarterly earnings and strong unit sales. Let's see here. The outlook, the combination of resilient economic data and the Fed's cautious guidance suggests that interest rates may remain elevated longer than anticipated, keeping investors focused on inflation and growth trends heading into next year. Well, who's been saying inflation's been running high for a while? Me. All righty. Next up, got third quarter GDP report. Let's see. Strider Elas put this together at First Trust, so let's read through this real quick. The final Q3 real GDP growth estimates were revised upward to an annualized 3.1%, reflecting stronger underlying components. Upward adjustments in consumer spending, primarily services, net exports, business investment, equipment and software, home building, and government purchases outweighed a downward revision to inventories. Core GDP, which focuses on consumer spending, business fixed investment, and home building, excluding volatile components like government purchases, inventories, and trade, grew at a 3.4% annualized rate, exceeding the prior estimate of 3.2%. Corporate profits, however, were revised slightly lower, showing a 0.4% decline from Q2, but still up 6% year over year. Excluding Federal Reserve losses, corporate profits rose 4.7% year over year. Despite the profits growth, the capitalized profits model suggests that stocks remain way overvalued. Real gross domestic income, an alternative measure of economic activity, was revised slightly lower to 2.1% annualized growth, but remains above 3% year over year. GDP inflation held steady at 1.9% annually in Q3, with prices up 2.2% over the past year. Meanwhile, nominal GDP, which combines real growth and inflation, rose 5% annually in Q3 and year over year, signaling continued economic expansion. Labor market indicators also showed resilience. Initial jobless claims declined by 22,000 to 220,000 last week, while continuing claims fell by over 5,000 to 1.874 million. These figures point to ongoing job growth in December, albeit at a slower pace than earlier this year. Overall, the data suggests a robust economy, but highlights reasons for caution in Federal Reserve easing policies, given nominal GDP growth and elevated valuations. All righty. Let's get to the next data report. November existing home sales, also from First Trust. Bryce Gill put this together. All righty. Existing home sales rose for the second consecutive month in November, increasing 4.8%, but activity remains well below pre-COVID levels. November's annualized sales pace of 4.15 million lags significantly behind pre-COVID rate of 5.25 million and the COVID peak of 6.5 million. Despite the Federal Reserve's interest rate cuts since September, 30-year fixed mortgage rates have climbed back above 7%, keeping many prospective buyers on the sidelines. Home prices are on the rise, with the median price up 4.7% year over year. Notably, the housing market has bifurcated, with sales of homes priced above $500,000 growing at double-digit rates, while sales below this threshold continue to struggle. This reflects higher-end buyers adapting to the new rate environment, while inventory at lower price range remains scarce. A mortgage lock-in phenomenon where home buyers with pre-2022 low-rate mortgages are reluctant to sell further limits inventory and suppresses activity. However, inventories have improved, rising 17.7% over the past year, increasing the month's supply of homes to 3.8%. 3.8 in November, not percent. While this is a marked improvement, it remains below the 5-month supply benchmark for a balanced market, helping to stabilize prices despite sluggish sales. On the manufacturing front, regional sentiment weakened. The Philadelphia Fed Index fell sharply to negative 16.4 in December from a negative 5.5 in November, while the Kansas City Fed Manufacturing Index also declined, dropping from negative 4 to negative 2. These declines indicate ongoing challenges in the manufacturing sector. Overall, while the housing market shows some progress, elevated mortgage rates, tight inventory, and uneven activity across price ranges pose ongoing challenges. So, it's better, but it's not great. Alrighty. Last up, we got an article here. If you probably saw in the news today, or maybe you haven't, Amazon or some of their drivers went on strike. I think it was in mainly the Northeast, but or on the East Coast. So, because I saw it on on the Business Channel this morning when I was sitting here working, and they were all happy and proud that they were shutting down work. I guess they're begging for more money. All right, well, let's dig into this. Let's see here. Workers at 7 Amazon facilities nationwide went on strike Thursday, organized by the International Brotherhood of Teamsters, after Amazon declined to negotiate a labor contract earlier in the week. The strike impacts facilities in Southern California, New York City, Atlanta, Georgia, Skokie, Illinois, and San Francisco. So it's some on the West Coast, but mostly Midwest and East. Teamsters General President Sean M. O'Brien criticized Amazon's refusal to negotiate, attributing the labor action to, quote, Amazon's insatiable greed, end quote. He stated, quote, if your package is delayed during the holidays, you can blame Amazon, end quote, asserting that the company ignored deadlines to negotiate fair terms with workers. I think they're still paying them, so it's not like they're not getting paid for their time. The union emphasized that striking workers, part of a larger group of 10,000 Amazon employees who have mobilized under the Teamsters, are demanding higher wages, better benefits, and safer working conditions. The possibility of additional facilities joining the strike raises concerns of broader disruptions during the critical holiday shopping season. Workers expressed determination to achieve their goals, with San Francisco worker Leah Pinsler calling the movement, quote, historic, end quote. And New York worker Adia Ortiz affirming readiness for a prolonged fight. However, this action has raised concerns about the long-term viability of these jobs, as many predict Amazon will eventually accelerate automation to reduce reliance on labor-intensive warehouse operations. The strike highlights tensions between Amazon's workforce and management during a crucial shopping period, bringing attention to broader issues of worker rights, corporate profit, and the future of labor in increasingly automated industries. Whether the strike results in meaningful changes remains to be seen. Yeah. So, I mean, I don't know. If I was Amazon, I'd just say, all right, you're fired. There's plenty of people who are willing to drive trucks around, around town. I mean, especially like if you get, stuck driving like where I live. I mean, it's beautiful out here. I mean, other than the snow in the wintertime, you might get stuck occasionally, and you got to deal with driveways that are a little slippery. But, the summertime, it's great. Weather's nice. It's not too hot. You get a nice tan. But anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So feel free to give me a call. I'd be happy to help. All right. Well, like I said, that's everything I had to cover for tonight or for today. I hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.